Hi again, everyone. Welcome to another episode of RV Business Capitol Talk, sponsored by the Dicor Corporation. With me, as always, Sherman Goldenberg from RV Business. I'm Rick Kessler from RV Business, and joining the two of us today is Jeff Rodino, president since July of last year of Patrick Industries. Jeff, thank you so much for your time.
Yeah, thanks, guys. Thanks for having me on today.
We got to start out with a spectacular financial performance report just late last week. I'm going to read this so I don't screw it up. Q4 net sales, 1.1 billion. That's a 49% year over year increase. And the full year net sales of 4.1 billion, a 64% year over year increase. Jeff, those are just absolutely spectacular numbers.
Yeah, thanks. It was a really incredible job by the team here. I mean, I can't say enough about our team and how they came together, and really in some difficult times with a ramp up in our main industries that we have never seen before. And the way our manufacturing facilities really had to work to make sure that we could get raw materials in, get them manufactured, working, 5, 6, 7 days a week to really meet the needs and do everything we could. So it was really a great team effort. Certainly the headwinds of the supply chain, but also the tailwinds of the industries and the leisure lifestyle that we serve between the marine and the RV groups was incredible. And I think everybody was able to benefit from the tremendous demand in the leisure lifestyle markets with what we do. And then on the other side of it, our manufactured housing and industrial divisions did equally as well and really stepped up, and we saw some great growth in those areas, which is a lot of the areas that we don't talk about all the time because we do so much in the RV market. So overall, it was exciting to see, and we hope to continue the momentum into the next couple of years.
My comment to Rick before we started up was, looking at the numbers, Jeff, it's almost as if Patrick's a poster child, an example as it is of an industry company excelling despite those headwinds. These numbers are unreal. They're historic. Okay, they're certainly historic for your company, and but to imagine for a moment that this occurred with the things you just mentioned, supply chain, et cetera, labor, it is amazing, isn't it?
Yeah, it was a pretty momentous feat for all of us. It really started back at the beginning of 2020, or when we got out of COVID in 2020, and it ramped back up, and we started to really invest really heavily into our manufacturing facilities because we saw labor was going to be an issue. So we did a lot of automation. We actually started some of those automation projects as much as 2 to 3 years back, and started to see that kind of come to fruition. And with that helped us a little bit on the labor side, helped us on our capacity side. We continued to push that. We spent more in 2020 on CapEx than I know that I've ever been a part of, and we plan on increasing that by about 50% in 2022 for the same reason, to really offset some of the labor issues in the market. Give us the opportunity for better capacity, better product coming out when we're running at a better capacity, better raw material utilization, and all the things that we feel like we need to do to sustain the levels we're at, and hopefully get us back into a more manageable time frame with our team members too. When you're running people 6, 7 days a week, you can't get to July 4th shutdown quick enough to give them a break. And that's something that we feel very strongly about, is trying to get in a more manageable situation across the board.
Rick, I got one more before. Okay. When you say this, Jeff, you're speaking for what in our one story I just read was 75 business units. Are you up to 80 business units at this point?
Yeah, a little over 80 business units and brands, somewhere in the neighborhood of 130 locations in 26 states.
We described you as one of the industry's most acquisitive companies. That's not an overstatement. Do you see that continuing in the year ahead?
Yeah, for sure. I mean, we've got a very disciplined capital allocation strategy in our company, and acquisitions is a piece of that. Certainly, there's other parts which include capital expenditure, dividends, and whatnot as a publicly held company. But acquisitions is still something that we're very interested in making a part of our capital allocation, and the pipeline for acquisitions seems like it's always full here. We're never looking for something to do on that side of the business, but we're also pretty disciplined. We're not going to do it just to do it. We want to make sure it's the right fit for us and ultimately the right fit for the company that we're looking to acquire. So I think we've been pretty successful at doing it, and we're going to continue down that path.
Rick?
Jeff, maybe end on this question. Take a look at 2022 for us. What's the climate look like? What's the industry's forecast from your perspective?
Yeah, no, I appreciate that. And I'd be remiss if I didn't tell you I did a little research, and I watched your Capitol Talk yesterday. So I got to hear what the RVDA guys said about where they thought the market was going as far as retail. Retail's really going to tell the story on the RV side. We've got four main components of our business, with RV being the biggest piece to that. And I honestly tell you that, if retail kind of holds its own, we feel like we're going to have a very robust year overall. I think there's going to be some ups and downs to it. Maybe the first half of the year being pretty strong, solid the way we're running, with some leveling out at the latter half of the year. That's kind of how we planned our business around it. As far as overall, Patrick, we feel like the marine division has a much longer runway because the dealer inventory levels are so much lighter, and they are having a little bit more struggle. RV guys, it's incredible to see what the OEMs were able to do last year to ramp up. I mean, there's a lot going into that, but with the concentration that we have in Northern Indiana, I think it gives us an opportunity to ramp up and ramp down a little bit quicker than some of the other industries we serve. So on the marine side, I think they have a little bit longer runway. Our manufactured housing is doing about as well as I've seen it in the last 10 to 15 years. There's a lot of momentum behind what they're doing, and the backlogs on the OEM side, and they're trying to increase. Again, they increase at a slower pace than we do in the RV industry. And then our industrial guys, they put together an incredible strategy and vision for 2022 and beyond. So we've got some good things going over there, which are in markets that nobody has any idea that we do. So overall, I feel pretty good about 2022, and we'll kind of monitor where retail is on the RV side to make sure that it's kind of in step with where we think things will land.
I know one of the questions you were asked during the analyst call after your performance report.
Yeah.
They touched on a couple of the headwinds that everybody's facing. One, of course, is inventory, dealer inventory. And I think your assessment basically, or Patrick's assessment, was lean but healthier compared to last year. And the other headwind was price increases, which, show me an industry that isn't dealing with that.
Yeah, for sure. I mean, we don't have the same, dealer touches that the OEMs do with regards to knowing exactly where inventories are at. But we've tracked these for, the last 15 years. We track wholesale versus retail and, look through that. And so we feel like they're in a much better position. I think that there's still some additional stocking of models that the RV dealers need. But I think things are in a good spot. So hopefully, we've got to be very cautious, and we got to understand when they're in a good spot and when there's enough. So that's something that I think our industry is certainly, as I've talked to our customers, there's a very keen understanding of what's going on with inventories. And as far as costs out there, Yeah, cost, I mean, we've dealt with them all last year. We still see, rising costs into this year. We're trying to do everything we can do to mitigate those and flatten them out. We hopefully will see it in some areas, the latter half of the year, but other areas where we don't have as much influence on the pricing because they're major commodities in the United States, we may or may not have as much influence on that pricing going up and down. But if it's something that's very RV related, we're really trying to push it.
What percent, you've alluded to it a couple of times, of your business is RV versus marine in manufactured housing?
Yeah, so RV is 59% currently. At the end of 2021, 59%. Marine about 17%, or about 16%. 13% would be manufactured housing, and 12% would be industrial.
Where do you see that? Do you see that in flux at all, according to your strategic plans?
We never really were on a mission to diversify out of RVs. It just kind of, I want to say it first started happening it started kind of naturally for us as we found some good play in the marine market. We'll continue to do that. I mean, if there's opportunities for us to grow and expand in the RV side, we're going to do that. We're not pegging a specific number that we want to be, 50% RV. But I will tell you that the other divisions have some pretty healthy growth goals in play, and some strategies where I think that they're going to catch up. And if there's any ebb and flow in the RV industry, you'll see that percentage tick up and down a little bit. So
I think we're close to the home stretch here. Rick, should we ask him about how it's gone since he stepped up to the presidency in July? I mean,
Absolutely.
leave him off the hook.
Is that a question? Is that a question,
Okay.
Sherm, or are you just asking? Sounds like you're talking to Rick, not me.
I'll put it in the form of a Jeopardy question. Yeah, how has it gone for you?
It's been great. I mean, the team around us is incredible, and that makes everything a lot easier for someone in my position. And I got a CEO and our executive chairman that sit in an office right with me, that have both sat in the seat that I'm sitting in right now. And I guess the overall guidance and mentoring that I've gotten over the years, I think, has helped a ton. I always tell people, I don't feel like things have changed too much, because we're all doing whatever we can to support the efforts of the business and what's happening. And that's not going to change. So it's been exciting. I've had to do a few things that I didn't want to do before. This might be one of them.
I was just thinking, yeah.
So, but getting on earnings calls, it's, believe it or not, for me, that takes me a little bit out of my comfort zone. But not that I don't like talking to people and doing that, but it's been a little bit different, and it's been a challenge, but it's fun. So it's all good.
Can I just say it's a pleasure chatting with you, and I look forward to seeing you in person before the open house, assuming we have an open house. And thank you very much for joining us today.
Jeff, thank you.
Yeah, thanks to both you and Sherm. We're not hunkered down over here. You can come visit anytime you want.
All right, I may take you up on that.
I appreciate you guys' time today and the questions. Appreciate it.
You take care.
You too.